All right, Brooker, welcome back to another trade retrospective. Today, I'm talking about the SPY trade that we put on last Friday, where we got paid 11 cents on entry and later flipped it back out for 46 cents more in credit on Monday for a total of 57 cents gain in just one day. The trade began on October 2nd when I shared it out on Twitter. I mentioned that we were buying the 339, 342, 350, 132 butterfly expiring on October 5th and collecting an 11-cent credit to put it on, meaning we got paid 11 cents to enter this trade. I later tweeted out again that I added another unit of the same butterfly, so officially we had two of these on. Now, the reason that I entered this trade was that on Friday early on, we had a strong move up followed by a lot of chop sideways, and the internals that day were also showing signs that we were going pretty sideways. The cumulative ticks were not really building heavily in any direction, and if I remember correctly, it was sideways to a little bit down, so I had a feeling that Friday was going to be a good day for theta decay. Now, I wanted to play SPY to the upside because of the momentum from the open, but given the choppy market conditions, I know I didn't want to pay a penny at all for this outlier play, so as always, I was aiming to set up either a call ratio or a butterfly structure, just like I've been doing. However, the question became just how far did I want to play SPY to the upside and by what expiration? That's when I looked at the chart of SPY, and at the time, I liked how it appeared as if we would be headed for the 50% fib level again, so I wanted to place the first long call of the butterfly right at that 50% fib level, which is where 339 is. So when I went over to the options chain to check out the pricing, my goal was to check out what the nearest term 339 call was going for and see what calls I can sell against it to make the trade essentially cost free. That's when I found the 339 342 1/3 ratio for Monday, which was going for a decent credit because of the large move off of the overnight low when the market opened. And at the time when I looked at the internals, they were confirming more of a sideways market, so I thought to myself, well, if we end up just being in chop mode for that day, then I can take advantage of theta decay on those three short calls and basically end up getting to play that 339 long call for free because those 342 calls basically paid for that long 339 call, and come Monday, I just need SPY to be somewhere near 339 for the spread to expand because those 342 calls are going to be too far to really have any value. Now, ideally, I would have chosen the 343 or the 344 calls because that's where that 61.8% fib retracement is, but those strikes didn't have enough juice to pay for that 339 long call. So I decided to roll with the 342s, which still gave me a 3-point wide distance between that first long call and those short calls, which I thought was good enough. And I decided to also buy the 350 calls just to alleviate margin and make this more playable in general for those with margin restrictions. So that left me with the 132, 339, 342, 350 call butterfly, which I got for an 11-cent credit. I entered the first one officially at around 7:45 a.m. Pacific, and the second one 15 minutes later, each for an 11-cent credit on Friday. Now, throughout all of Friday, the market basically ended up just chopping around and draining premium. And by the end of the day, the butterflies each had already expanded in my favor by about 20 cents or so. So fast forward to Monday, here I'm looking at the 5-minute chart. We can see that SPY basically opened with a gap up, backed by really strong market internals. In the first 15 minutes, SPY shot higher. At the time, it was trading around 337, which allowed the butterfly to expand just a tiny bit. So I went ahead and took off that first butterfly for 21 cents, locking in about a 32-cent gain on one of the official flies, and I continued holding the rest as the market internals confirmed higher movement. As the market continued climbing higher and reaching new highs of the day, the spread slowly expanded a bit more, and I was able to close out of the second piece at around 7:54 a.m. Pacific for 46 cents, netting a 57-cent gain on that one. That closed out the official spreads in the trade sheet. But personally, I had more, and throughout the day, with the internals continuing to look very bullish, I went ahead and progressively scaled out more. Finally, I held on to one for the rest of the session to see how much it would expand, and around noon, when the market once again broke to new highs of the day, things got very interesting because SPY began trading above 339, which is where that first long strike is. At this point, that 339 call became in the money and gamma was at its peak, which meant that the gains became larger and larger for every tiny movement that SPY made. And with the way the internals continued to remain very healthy, I continued holding until I was able to flip out the last piece for around 71 cents, netting me a total of 82 cents of profit there. Officially, this trade was an 89-cent winner in total. Not bad at all for just one day, especially without any necessary adjustments and without having to take any heat throughout the trade. All it was just setting up the trap, letting time drain those 342 calls on the day of entry with all of that chop, and just sitting back and scaling out of the profits throughout expiration as the market came into that trap. Very laid back. And what I also really love about this trade is that if I was wrong, if suddenly the market tanked, at least I didn't pay a debit on this trade, right? And in this type of environment where things just quickly shift and swing to the other side, being able to keep your money is so important, especially as you saw today when news about the stimulus bill came out and the market just reversed on a dime. So I know one question some might ask is, what if positive news around the stimulus bill came out over the weekend and futures opened on Sunday up 60 points? And to that, I'd say, that I probably would have hedged with futures via the ES or the micro ES for more granularity, but ES would have had to be at 34.20 for me to really have to hedge, which was like 80 points above Friday's settle. So I wasn't really worried that much about it. Now, the other thing I wanted to mention is the importance of being able to scale out of multiple spreads. The beauty about these plays is that because they're so cheap and because you're not paying a debit to put it on, you don't have to worry about being wrong on your directional bias. If SPY tanks, you actually pocket premium and still come out a winner. What you do need to worry about is the risk beyond your profit zone in the direction of your favor. Now, as long as you have the margin and are okay with the risk that you're taking on, you can go ahead and put on multiple lots of these spreads. And then if the market heads towards those flies, you have the opportunity to slowly scale out of them and progressively harvest those profits. It's much easier than having just one spread and trying to figure out when's the best time to take profits on just that one spread. Of course, you're not going to nail the peak profit, but the more spreads you have on, the more you open yourself up to the opportunity of leaving one on for that home run return, right? So that's something to consider when doing these plays. Obviously, if you think that the tail risk is too much for your liking, don't put on a lot of them, right? Only risk what you're comfortable with. But yeah, that'll do it for this trade retrospective. As always, if you have any questions or comments, feel free to leave them down below and check out the links in the description to our Twitter and most importantly, our Discord chat room. We got a good community of traders that are constantly helping each other out to improve. Probably unlike any other chat room you'll ever see. I promise you, we don't spam alerts on Momo tickers all day. Instead, we chill like 90% of the time, and when we see a good trade to be had, we snipe it out and share only the highest quality setups and focus on managing those high quality trades. Plus, we have a ton of content around the process improvement because we believe that trading should be treated like a business. All right, so come check us out. It's all free in the chat room. But for now, stay safe, Breaker, and I'll catch you in the next video. Cheers.